Hey folks, it's Jeremy Whaley here from Trade Maestro, and I've been trying to get you a little market update for this Monday, March 13th, 2023. And every time I've sat down this weekend to do it, something has changed. We got bank failures, we got government bailouts, we got all sorts of crazy things going on. So what should we expect in the market this coming week? Well, just a few hours before the market opens, I'm finally getting it done for you here. And I'm going to tell you everything that I think about the big picture in the market coming up right now. Let's go. Hello, everybody. It is Jeremy Whaley here from Trade Maestro. Hope you're doing fantastic. Hope you've had a really fantastic weekend. There is a lot going on. I'm telling you, it is crazy. As I said in the opening, more than once this weekend, I have sat down and I said, I'm going to get a market update knocked out starting Friday afternoon. I was actually going to do it right at market close, and things just keep evolving and they keep evolving. And so here we are coming into the last few hours before the new trading week, and I'm finally getting something out. And even right now, futures are throwing us some curves because the futures are up, as I record this, over 400 points. Is that a problem as we move into this week? Maybe, maybe not. We'll talk about it as we get into this market update. So let's get over here and let's go full screen so you can really see where we are. The biggest story outside of the bank failures, the biggest story is the reality that our Dow Jones Industrial Average has dropped below our support level, our critical support level that we've been watching for the last several weeks. It has finally dropped below it with confidence. And so we've got a lot that is now pushing in the bearish direction. And this is really just potentially setting us up for the continuation of the 2022 bear market. Let me kind of draw your attention here. You see two purple lines running across the screen. This was a resistance area back last November. It has been a support in the late part of the year and the first part of this year. And of course, the last couple of weeks, we've been pounding into it. And we thought we were actually breaking to the upside last week. It looked like we had found that support. It looked like our stochastics was supporting a break to the upside. We traded Monday and you got a little evening star reversal candlestick formation, and then boom. That's my sound effect there. The bottom fell out and we're off and running in what looks to be now a new continuation of the bearish trend. So it's not really a surprise. The location for this is exactly where we figured the decisions would be made. And by the decisions, I mean the trading direction. This is where we figured it would happen. It was just taking a little bit longer to play out than we wanted it to. So how does all of this fare for the future? Well, to answer that question, what I want to do is I want to zoom out a little bit and I want to actually go back and look at the bigger picture of this trend, and just kind of going back to last fall. So 2021, when we made these market peaks here at the end of 2021, and we set up for the big bear market. Now, some of you were paying attention back then. Some of you were not. I don't know who you are, so I don't know if you were watching me back then or not. But at that time, I actually made some market forecasts, and I anticipated a big bear market for 2022. At that time, I said I thought it was probably going to be about an 18-month bear market. And of course, all of 2022 played out that way. And then right at the end of the year, if you can see on the screen here, we started to get some questioning signals where, as far as the Dow Jones was concerned, we were actually getting signals that maybe the bear market was over. But the NASDAQ and the S&P were still very, very bearish. And so we've been in this big uncertainty for the last several months here as we're trying to get some clarity of what's going on. I want to switch now and go over to the S&P and just show you the difference here. Coming from that same time period, from the peak that we had at the end of 2021, beginning of 2022, this bear trend was in play the entire time until just a few weeks ago. And then what you see happening right here, I'm going to kind of, that last arrow that I just drew right here, okay, we're going to zoom in and look at that with a little bit more detail here, okay? So what you see having happened here, let me get rid of some of these indicators down here. And what you see having happened is we broke out above our resistance, and then we came back to do what is normal, which is to test that old resistance as a new support. And the question is, can we break to the upside? That's normally in a reversal what you would see. Well, that didn't happen. Instead, what happened is we broke out, came back to test it as a new support, and it failed. We dropped down, and now we bounced last week to test it as a new resistance, and it has held. And now the bear trend looks to be continuing. If you look at that little section that I just drew out, you've essentially got 6 weeks of a bear trend now resuming. And so what had happened for several weeks in there is there was a lot of confusion because the S&P was very, very bearish. NASDAQ was very, very bearish. The Dow was trying very hard to reverse and get back into a bull trend. And eventually, like you see here, in January, the S&P finally broke to the upside, and it looked like maybe we were actually going to start to get a bull trend here. In fact, you can make the argument, if you can see on the chart here, I'll go back to full screen. If you can see right here where I'm circling, there's a high. Now it's a lower high from the previous high. That was the previous high. That's the new lower high. But then you had a higher low in here. And then we had our first higher high of this sequence. And so what we were looking for here is, would we get a new higher low and continue? Well, we thought we had that maybe a week ago here. Now, of course, we dropped back down. Now, it could continue from here. We could have the higher low, and we could just be off and running to a nice little bullish trend. But the problem has been all along is I don't buy it. I don't believe it. I don't think things look great in the economy, from inflation to just all sorts of problems that are going on. I just don't think that things are going really, really well. And we're way short of where I feel like we should have been in the big bear trend. So let me show you where I think we should be in the big bear trend. Actually, before I do that, I'm talking about the NASDAQ. But let me keep that loop open here for a minute here. In the big bear trend, I feel like we need to go about a 50% correction, and I'll show you that here in just a moment. But as we're looking at this trend right here that's happening in the S&P, what I'm seeing right now is a perfect setup, an ideal setup to continue that preceding bear market that we saw last year, basically. Okay, so I want to zoom in here just a moment and show you a couple of oscillators and a couple of indicators that will also give you some clarity here. That's the wrong one. Let's put this one on there. There we go. You see the one that's in the middle with the green and the red. This is a derivative of the awesome oscillator. And this signal right here is a continuation, a bearish continuation signal. It's come in very, very strong with a very good price action, bouncing up into the averages, bouncing up into that resistance point, and continuing. So that's a very good bearish continuation signal. If you look at your stochastics, it is also continuing to the downside. So all of that is very, very bearish. Now let me show you the NASDAQ. And the NASDAQ has been the most bearish of all from the beginning. In fact, this was the one that really tipped us off to the bear market back at the end of 2021. We knew that the market was rolling over because of some of the stuff that we saw back here at the top. And all the way through, this bear market has been in play, including the very end of the year. We actually ended 2022 at the lows for the NASDAQ. It was about a 34-35% sell-off over the course of the end of 2021 all the way through the end of 2022 for the NASDAQ. So very sizable sell-off that we had there. And then just like we saw in the S&P, you know, we had this little breakout to the upside, and it kind of head faked everybody. It's like, well, okay, maybe we are actually getting into more of a bull market here. Maybe we've seen all the selling we're going to see. But as we zoom in here, what do we see? Nope. We broke out and immediately sold off. And this week hit a new little peak, and boom. This thing, again, is very much poised to continue the bear trend. Our JMAC oscillator here, which is, again, derived from the awesome oscillator, our stochastics, both of these very, very bearish here. And it's just a continuation signal. I mean, that's all there is to it. It's a bearish continuation signal. I have very, very little reason why, based on these charts that we see today, to suggest that anything bullish in the short term is here. Now you say, well, what could throw this off? Well, what could throw it off is a big 400-point day tomorrow, which is what futures are indicating right now. So let me show you that right here. I'm going to flip over and take a look over at our Dow futures. And if you can see this picture right here, right now, as I'm recording this, which is just after 1 a.m. Eastern time, Central time, 1 a.m. Central time, what I'm seeing here is we're up about 407 points. And you see how those candlesticks are shaping up. Now, if you look straight down at these oscillators, you see that, no, they're still looking pretty bearish here. We do not have a reversal of this trend. In fact, I'm going to forecast what you're probably going to see is potentially a bullish day on Monday and maybe into Tuesday, running into these moving averages before the bearish trend continues. And that's what I want to kind of set you up to be expectant of here. I don't expect that we'll just see a flat out market collapse over the next 1 or 2 days. It could happen. What I'm expecting to see is more ebb and flow. I've said that all along. There's always an ebb and flow to the market. It's very rare that you just see a flat out collapse. Although we do have the environment where that could happen. And that's what I want to bring you to now. I want to go back in time and I want to talk a little bit about the market, the bear market of 2008. And if you didn't trade that bear market, then I guess good for you. You avoided yourself some nuisance and some pain. It was an annoying time for many people. But I want to go to, on the S&P, sorry, I'm going to have to go way back in time here. And I want to go to this time period right here, which is just before the bottom fell out. And if you can see that right there, that's it. Yes. This is the spot. And what I want to draw your attention to here is there's a series of candlesticks that took place right here and then overlapping that one candle to right here. You see these 2 red candles with the 2 small green candles in the middle, and then following that was a red candle, the 3 small green candles in the middle, followed by the next red candle. This pattern is something we call a falling 3 candlestick formation. It's a very bearish continuation pattern. And I'll never forget this because this was actually when I was recording, or not recording, but teaching live, my very first trading classes. This was back in 2008. And as we broke below that support level there with this chart pattern, this candlestick pattern, I told the 8 students that I had, it was my very first class that I was teaching, I told them, I said, well, you know what? This is a big bearish signal. Now, I didn't know what was about to happen. I had no idea that the financial collapse was coming. I had no idea that the foreclosure market was about to do its thing. But I did know that the bear trend had been in play. And if you did the numbers on this, what you would find is from about October of 2007 through that time period, we were down about 20 to 25%. Okay? And that's a very important thing to recognize, and I'll show you why in just a moment here. So just understand from October 2007 to July and August, September 2008, we were down about 20 to 25% overall in the market at that time. And if you were listening to the news, if you're listening to the media, there was, a little hesitation. They're like, yeah, this has been a great year in the market, but everybody was saying it was going to be okay, right? And I want to show you where we went from there. So that red candle is a lot bigger than people realize. That red candle on the S&P represented a negative 4.7% single day of trading. Okay, it doesn't look nearly as big today as it did in the moment, okay? Now watch what happens next, and this is what's really relevant for today. Watch what happened. I'm going to scoot it forward. The next day, we actually had a green candle that went 175 to the upside. Okay. Oops, I left a number out of there. 1.75% to the upside, followed by another big red candle that went 4.7% to the downside. Okay, now I'm going somewhere with this. I know it's a little bit boring, but I'm going somewhere with this. Let's move it forward one more day and see where we went. Oh, look at that. Now we have a 4.3 to the upside. Maybe you're starting to see where this is going. And the very next day, what happened? It went down. No, it went up. What happened? It went up. It went up another 4%. Now, why am I showing you this, and why is any of this relevant to today? Because it confirms to you what I was just saying you can anticipate for the week ahead. Okay? You can see in the middle of this big bear market, you have huge candlesticks, and the world was literally falling apart right here. Okay? This was in the middle of September of 2008. All the news headlines are starting to come out. We're starting to get the AIG concerns, and we're starting to see foreclosure rates skyrocketing. We're starting to have credit markets seize up. Okay. And this is the way the market responded. You're down 4.7%, you're up 1.5%. You're down 4.7%, you're up 4.3%. Next day, you're up 4%. So you look at this, you have over 3 sessions, you're down about 8%. And then over 2 sessions, you're back up 8%. You see that pattern? Okay. Now let's keep going here. Let me show you how this whole thing played out, because most people, they don't realize this. The very next day, we're down another 3.82%. So almost another 4%. Okay. These are very, very volatile days. Okay. Next trading session, what happens? We're down another 1.5%, then a 0.2%. Then we're up a little bit less, and then we're down a big 8.79%. I'm going to stop writing them on the screen. We're up 5%. We're down 4%. We're down 1.5%, down 3.8%, down 5%. I have to scoot it all over, and I'm going to spoil it for you. That's where we went, and that was the crash of 2008. Okay. But what I wanted to draw your attention to is this right here. This is what I think we're going through. This is what I think this week in the market is going to look like. Something similar to this. Okay? Now, we have not currently seen 4.7% days. We haven't seen those kind of days yet. I do think it's coming. And I'm not specifically going to forecast that there's going to be big bank runs, but we're seeing it. And what we're seeing, obviously, over on Friday, we saw it Thursday and Friday with Silicon Valley Bank. We already saw other banks that have failed this week. And now over the weekend, what happened? SBNY is shutting down. They were shut down by the Fed just on Sunday afternoon. A bunch of the banking deposits at Silicon Valley are not covered by FDIC insurance. And so now the Treasury, Janet Yellen is stepping in and saying that the Treasury is going to actually insure those positions. We have a lot of uncertainty. Am I saying that we're going to get into this kind of a panic? Well, if you've been following me long enough, you know that I've been forecasting that since last January. Okay. So since last January, 2022, I've been saying there would be a time when an event would happen, and I couldn't tell you what the event would be, but I said an event will happen. And the reason I can't tell you what it's going to be is because I don't know. I think we're here. I think we finally figured it out. Okay. But at that time, we didn't know what it would be. I just said there would be an event that would come, and it would drive us the rest of the way. We started the bear market all through 2022. There would be an event that would come that would drive us the rest of the way. And I forecasted back then we'd be done by June or July of 2023. I think we may be a little bit behind for that. We may be pushing into the fall of 2023 at this point, but I still contend that we're looking for a big event to really drive us over the cliff. I think this could be it. There's a good chance this is it, especially if we start to see the dominoes starting to fall, and it looks like we are. So let me hit on that just a little bit. Actually, before I hit on the dominoes, I want to draw your attention to a couple of things in this 2008 crash. I've done this before, but I'm just going to do it again. From peak to crash, okay? So from the October 07 peak to the point where it looked like a nice orderly bear market until it didn't. That was about a 20 to 25% sell-off, okay? That was that's another good point. That was over October 07 to September 08. So, that was over 11 months. Okay. Now let's look at where that whole thing ended. That whole thing ended at about a 60% sell-off. I want to come now to current time. So we'll just scoot this thing forward and get over here to current time period. And what I want to draw your attention to is from January 2022 to the bottom, 20%. What? Yeah, exactly the same that we saw in 2008. We've kind of had a little bit more of a bounce than we had in 2008 because we didn't really have this bounce. But the timing wise, we went from January, 11 months into November. That was the bottom. We've had a little bit of bounce. Like I say, we're about 3 months, a little bit longer into this cycle than I had originally anticipated. But it looks like we're getting that next phase of the bear market here. So how far do I think it's going to go? Well, I have always said, I've said since last January, I was anticipating a 50% sell-off. And so for the S&P, that puts us at about, here's the easiest way to remember it. It's the bottoms from 2020, okay? And that number ends up being around 2,300. Okay, it's the bottom of, excuse me, bottom of 2020. I'm not going there because of the dates. There's actually, you can see these green and blue lines and stuff. There's some Fibonacci reasons that were there. There's a lot of reasons that I came up with that number, but around 22 to 2,300 is kind of my target for this. So compared to where we are right now, that's quite a bit of a fall. On the Dow Jones, that number looks like 18,000. I know nobody wants to hear that, but that's the number that I've got. Again, we've done some fib projections on this. We've done regular support and resistance analysis, several other things that we've done to come up with that number. There are a couple of others on the way, and if we get into this in the short term here, 29,000 is kind of your big number to get your eyes on. Follow that with about 26,500, and then if we drop below that, then the sky will be falling, so to speak, okay? And then as far as the NASDAQ is concerned, the relevant numbers on the NASDAQ, those go down to around 7,000. That's kind of the round number, okay? So that kind of gives you an idea. The NASDAQ actually has the least amount to fall because it's already fallen the most. But there's still quite a bit of downside to it. Now, you say, how fast could this happen? Well, I do not think this is going to happen overnight. I could be wrong. It could happen overnight. The futures suggest right now that we're going to see one of those big days tomorrow where the market rebounds a little bit. Now, we're not looking at 4 and 5% days. Right now, we're still looking at like 1 and 1.5% days, but it looks like 400 points. And so that's a pretty sizable day. And so be prepared for that over the next couple of trading sessions on Monday and Tuesday, maybe even into Wednesday, to see that volatility, the up and downs. Be prepared to see 400 or 500 points up, 400 or 500 points down, 400 or 500 points up. Be prepared to see that potentially for many days in a row. And just because you see a big bullish day, it doesn't mean that the bull market is here. Right now, we really have a lot of confirmation that the bears are here. And what I want to draw your attention to is a couple of things that we haven't talked about yet. Charles Schwab is a story that's not getting nearly enough attention. This is basically the biggest broker in retail trading. And this is what happened. Now, we had a bearish trade already set up on this. It happened so fast. We blew right through our targets. Our targets for this were down here around the $61 range. And, of course, we blew straight through that. We had an entry in here at $73.53. And we didn't hardly even have time to get into that trade because it did it all in 2 days. 25% in 2 trading sessions. There is more to this story. I don't know if I even have a clue yet what all the pieces of that story are. But there's a lot more to this Schwab story. There are a lot of uncertainties happening in the financial markets, or the financial sector, I should say, that are not coming to light yet. And that's what I believe will be the impetus. So you look at things like let's see, it was SIVB, Silicon Valley Bank. Sorry, I have to think through the ticker on that. It's SVB, Silicon Valley Bank, but the ticker is SIVB. See, it's confusing. Silicon Valley Bank, this is a big story. It was down 72%. 72% from peak to valley. And then here's what a lot of people don't realize. It had rallied. It had rallied, quick numbers here, from about $200 to $350. So it wasn't quite 100%, but, you know, peak number, just round numbers off the top of my head, 75 to 80% rally that you had in here. And then it sold off, obviously. And then last week, Thursday and Friday, boom, bottoms out from underneath it here, okay? So I'll take that full screen for a brief moment here so you can see that. So we sold off from 775 down to 200. These are round numbers. I'm not looking at the granular numbers. Then we rallied to about 350. So that was about a 75% rally. And then, boom, there was your gap as the bottom fell out. Now, could we have known? Probably. Probably we could have known, but the thing is, it's very deceptive. And I want to show you why I sent a message to a friend of mine yesterday on Saturday. I'm recording this video on Sunday. I sent a message as I was kind of going through the carnage here. I sent a message to a friend of mine, and I actually brought up this bank, SBNY. So if you're not familiar with SBNY, this is Signature Bank of New York. And I brought it up because I just was flipping through all the financials over the weekend, and I said, what am I not seeing here? What else could be going on? And I want to draw your attention to this one. This is a very interesting story, one that I had not realized until this weekend. And you'll notice that this stock went from about 360, a little higher than that, and had sold off 80% to $100 a share. So from 360 to $100 a share. Another part of this story that's interesting is it did not really participate in the rally that we've had from January through March. Okay, it didn't happen. It was about a 40% gain. It went up about $40, but just wasn't that big of a move relative to what a lot of the other stocks have done. And yet, here's the part that got my attention. When I looked at the financials, which I don't really do often because I'm a technical trader, but if you can see this, the profit margin on this, and I don't know if you can see it or not, so I'll just write it in here. The profit margin for this company is 36% profit on almost $4 billion in revenue. And if I went back to last year, it was 39% profit in 2021. If you go back to 2020, it was 26% profit. So you tell me if that's weird. So I sent this to my friend yesterday. I said, you know what? There's something weird going on with Signature Bank. Their profit margins are off the chart. I mean, if you compare these profit margins of Signature Bank to, say, Wells Fargo, it's almost double. Like Wells Fargo is like 15, maybe 20% profit margin. Here we're dealing with 39 and 36% profit margins over the last 2 years. It's like, yet the stock has lost 80% of its value. And so I told my friend, I said, there's something going on here. Either it's one of two things. There's only two things that could happen. Either one is this is the most undervalued stock ever, so we should be buying the crap out of it because it's going to go from $100 a share to $400 because it's unbelievably profitable. Or there's something we don't see. And I told him on Saturday, and I have the text to prove it. I told him on Saturday, I said, I bet Signature Bank is on the short list. I said, they're going to be going under soon. I can't tell you what's going on because I don't know. I'm not privy to that insider information. I can just tell that there's something not happening here. And sure enough, Sunday afternoon, the Fed comes in and shuts down Signature Bank. So the question I have for all of you is, what else are we not seeing? What else? What other kind of anomalies are happening in the financial markets? What other kind of anomalies are happening at other banks that we can't necessarily see, where maybe they have too much profit margin for what the stock performance is doing, or maybe the stock performance is outperforming what the margins are actually showing? There's all sorts of manipulation in the financial markets. And if you believe otherwise, then we're all naive to believe that. So there is truth here. There's truth somewhere. The question is, what do I not see? So that's going to kind of be one of the themes we'll be looking at this week. I'm going to try to get some other videos out and show you some other stuff that I have found and just kind of give you some things to look at. This is not specific trading advice. It's not specific financial advice. It's just some different things to look at as we're looking at kind of trying to interpret what's going on and try to get ahead of different things, okay? So I hope this is encouraging to you. I hope it's actually helpful for you. Yes, I do think there's going to be more bank failures. Yes, I do think there's a big bear market coming. But no, it is not a reason to despair. There's a lot of things we can do in bear markets to make money, a lot of things we can do to actually make incredible profits. So those are the kind of things that we are here to help you do, and obviously to think through and do some analysis. So if you have not subscribed to our YouTube channel, or if you've not liked us on Facebook or followed us in the Facebook group or whatever you need to do, depending on where you're watching this. If you have not done that, this is the time to do it so that you get all of my market updates and you get all of these little different anecdotes that I send out, whether it's a little short 5-minute video or a long video. This was turned into a pretty long one. What are we looking at here? Like Yeah, 30 minutes, pretty long video. But whatever it is that I send out, you'll get the alerts and you get the notifications for it. And then, of course, you can respond. And, of course, check us out over at trademaestro.com. If you haven't done that yet, check us out over at trademaestro.com. So like and subscribe. Like and subscribe here wherever you're watching this. Check us out at trademaestro.com. And until next time, I wish you the best. Happy trading, and we'll talk to you soon.